You can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
You say, despite the S&P action we're seeing, Bitcoin, which traditionally would follow suit, has not really. It's been stuck in this price range. Break it down for us.
So normally we see risk on being something that drives Bitcoin up. But over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin, people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart. And I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market. And that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central.
Right. So talking about bear market, because the last time you were on and other times you've been on, you spoke about 12,000 or lower for Bitcoin. Have you canceled that out? Have you had a change of heart on the bearish front?
Yeah, I'd love to say I have, but I haven't yet. And the key is this level, right? So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000.
Would this not build the case for assets like crypto, like gold, of folks now looking for alternatives outside of the system? Does that not build the bull case for you?
Yeah, so it absolutely does. But the key is that doesn't trump fear. It doesn't trump emotion. And so for me, as soon as the banking crisis started, I said to myself, all right, this is exactly why Bitcoin was created. This is the essence of why we need Bitcoin. But again, in the shorter term, when you see panic, like when you go back to the COVID 2020 March period where things were in really a panic central, you saw even gold selling off because during panic, people don't ask questions. They sell, they ask those questions later. And I think that's what we're coming into. We're coming into a period in the equity markets where I think you're going to get a realization there's a recession. I know we'll talk the S&P in a little while, but you're going to get this sell-off in the stock market. My guess is it bleeds into crypto and it creates more selling in crypto to the downside.
Okay, if we were to hit the 30,000 for you, which is the key level here for Bitcoin, then where could you see prices headed?
Yeah, so if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. I've seen algorithms that'll do that purposely to stop people out or actually convince people that last little bit of FOMO to jump in on board. Think about the 65,000, which was the early 2021 high, and the 69,000 level where it convinced everyone we were headed to 100,000. But if we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so. So for me, when I'm investing hard-earned money, I want probabilities heavily on my side. In this case, there's not probabilities heavily on my side.
Okay, let's talk some stocks now. NVIDIA. What are you doing with NVIDIA here?
So I am absolutely short right now on this stock.
Okay.
I do have a price point, I think is right around 274, so I'm out of the money just a little bit on this. The reason I'm short it, number one, it was the best performer of the first quarter. So what we saw later in the quarter is a lot of window dressing. For those of you guys that don't know what window dressing is, it's essentially where people, the funds out there, they say, hey, let's make our statements at end of quarter look the prettiest we can, so let's buy the stocks that were the best performers. Then when those statements go out to clients, they say, oh, they were in NVIDIA. Well, guess what? They probably only bought it at the end of the quarter, but it's still, again, the investor, the client doesn't know that. So you saw a lot of additional upside here on this stock. When you look at the valuation, when you look at the chart in front of you here, you can see so many technical levels right up into this level. So to me, it's run way too far too fast. The valuation has gotten out of control. And remember that chip stocks are cyclical. So if we are going to go into a second half recession, which is what all my metrics are telling us, then the chip stocks are going to see some downside momentum here. And even NVIDIA, which is running on AI, that's not going to be enough to sustain it because AI is still too far away.
Your thoughts on recession? You see it happening this year?
I do. And again, we can flip over to the S&P 500, and I think it's important to recognize that the S&P has really gone nowhere in a long period of time. That's actually not a good thing. When you have a big drop from the all-time highs, and then you get into this consolidation pattern, what it tells you is there's an equal amount of buyers and sellers, and that's why price is chopping sideways, right? A one seller equals one buyer. Problem is, we know the retail crowd continues to be buy the dippers. So why haven't we gone higher? The answer is smart money, big money, institutional money is likely selling into it. So ultimately, my guess is we have another leg down in the second half of the year. We retest and actually take out the October lows and probably head down towards that pre-COVID high here on the chart. So I do have a downside price target at minimum by year end of 3,300 and change. I do think worst case we could even touch 3,000.
What kind of correction is that in percentage terms, Gareth, that you're looking at?
Yeah, from 4,000 to let's say 3,000, we're talking about a 25% drop from here. So again, I think the second half is going to be, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that we are definitely going into a recession and that the Fed can't bail us out by cutting rates aggressively or printing money because inflation is so high. All right, in the past, in the last 10, 15 years, any sort of blip in the screen, case in point, 2018 in December, when markets dropped about 20% in 6 weeks, the Fed started cutting rates immediately. They could do that because inflation was sub 2%. They could do what they did in COVID because inflation was sub 2%. You can't do that with inflation up above 2% or 3%, as I think it's going to stick around. And that's going to be a realization that is scary for the market. It's like a child where the bumper sides get removed. You're now open to get hurt by the reality of the market, and that's going to be pretty scary for the markets. You're going to see a big sell-off when that realization happens.
Getting past the 2,000 an ounce level, we saw fresh news that China keeps adding to their gold reserves. Are they helping to fuel the market? Is the window open on gold here, Gareth?
Yeah, so and this is, by the way, I remember talking 6 months, a year ago with you, and I talked about how even when the dollar was up 20% and gold was only down, 5% on the year in 2022, how bullish that was, because in a normal market, if the dollar's up 20%, gold should be down 20%. And so it told us there was big money accumulating. There's no bigger money than central banks. Central banks were buying. That was an indicator to buy. We've obviously seen the price action. Now we had this little flag pattern. Look at this beautiful flag and breakout today on the back of what you're mentioning, and also the dollar is getting substantially weaker today as well. We are going to go up and attack this triple top up here at around 2075. You might get a small pullback there, but I still have it priced in that gold is going a lot higher. The momentum trade hasn't even caught up to gold yet, so I think 2,300 by year end is a no-brainer, maybe even higher. But again, I do think that gold is following the playbook of the 1970s, the same chart pattern playing out. We then had this sideways pullback. Even when inflation was going up, you had this pullback in gold. All right, same thing happened over the last 2 years, from 2020 to 2023-ish, early 2023, and then look at what happened afterwards in the late 70s into the early 80s, this meteoric rise in gold. So I think that's the replication. If you look back historically, this is the only period in semi-recent history we have to go off of, and it really tells us that gold could have its moment here. We've been waiting a long time for gold to have its moment. It might soon be here.